All right, what is going on, everybody? It is Stocks with Noah back again with another video. As you can tell by the title, I'm going to be talking about that huge OpenAI scare that we had today that sent markets down tremendously. As you can tell by my screen, everything was kind of red today. All the major indexes, including a whole bunch of tech companies besides Microsoft, was very resilient today. A lot of them did end up recovering, but for the most part, they were down. A lot of which was due to some slight profit taking, but majority of which was caused by this OpenAI scare. By a Wall Street Journal article kind of talking about how they're going to be missing their revenue quotas, which caused everyone to kind of, lose belief in this AI trade. But I'm here to talk to you and give you clarity on the situation and kind of, just fill you in on everything that you guys might not understand or might have missed. Now, I was mentioning in a few videos prior about a newsletter that I'm releasing. I have released it. It is called the Daily Wire. So please, at the top of the description, there's going to be a link. Make sure you sign up. It is absolutely free for you guys. I release it every morning at 9 a.m. and I give you guys trades to look out for. For instance, one of the trades I told you guys today was look for Microsoft to retest the 425.30 line. If we break above that, 431 is absolutely in question. And if we go to Microsoft's chart here, as we can see, they did fall below the 425 line, but they did recover immediately within the day. And obviously from there, it was just all lights ahead. So those are just one of the many trades I told you guys to look out for. I gave you guys charts for Microsoft looking at key levels in here. ARM, Marvell, AMD. Marvell is a company I'm extremely happy to be an investor in, And by the way, none of this report or none of this video is going to be a solicitation by any means. It is not financial advice. Please do your own research, and I'm not here to, get you to buy a course, nothing. Everything I do is free and for your guys' information, all right? So I just want to give that to you guys. But nonetheless, let's jump right into everything that matters and what you're here for, because your time is valuable. So firstly, like I mentioned, the catalyst, it was a Wall Street Journal article. It was published last night, and it was circulating this morning. I couldn't find the exact one because obviously, as you can tell here, I don't have the plus offer for Wall Street Journal, but I found a few articles kind of similar. So talking about, how they falter on the OpenAI stumble, OpenAI misses key revenue. So this wasn't the exact article, but it's essentially very similar. The report said that OpenAI fell short of its own internal targets for both revenue and new user growth ahead of its highly anticipated IPO. But the real bombshell, it was not the miss itself for the revenue quotas. It was the quote attributed to OpenAI's CFO, Sarah Friar, which is this individual right here. Excuse me. According to the journal, Friar told leadership she was concerned OpenAI may not be able to pay its computing contracts in the future if revenue doesn't expand fast enough. Essentially, what that means is that they don't understand. Sorry for starting there, guys. I'm extremely tired. But the CFO of the company at the center of the entire AI capex boom is reportedly worried that they can't pay their compute bills, guys. Yes, that is exactly what she said. In other words, they're scared they might go bankrupt. That's that corporate speak. So, whoa, when you hear that, OpenAI going bankrupt, wow, that's a lot to, take in. But I've kind of been calling that for a while. I've been saying, I'm pretty sure I said in my last video, OpenAI could very well be the BlackBerry of this whole AI trade, and have Claude and Anthropic be the Apple. But, because of this, OpenAI actually denied the framing from that Wall Street Journal article. And they said, they are firing on all cylinders with, strong enterprise demand. Sam Altman, or as Elon Musk would call him, Scam Altman, and Sarah Friar issued a joint statement saying, they're totally aligned on buying as much compute as possible. But, the damage is already done. Why, you may ask? It's because OpenAI is the demand engine for hundreds of billions of dollars in committed compute spending from all the major hyperscalers. If the engine, stops or sputters a little bit, the entire infrastructure for the trade has to be repriced. And that's exactly what we saw today. We saw sell-off, fears, and risk-off trading. All right. So let's look at exactly what moved today. So the NASDAQ composite was they finished down 1.3% or 0.9%. The S&P finished down 0.5%. The Dow finished down 0.05%. And it finished better than the other indexes. It's driven by, defensive rotation, and also a huge pop in the Coca-Cola stock today. But it was mainly driven by defensive rotation into there. We saw a lot of people cycling out of the tech-heavy indexes and kind of putting their money into safer things. But the main parts here is the whole AI infrastructure. We had Oracle, which I've been against for a while. If you look at their statements, their the income statements, balance sheets, all that stuff, it's just terrible. They've issued so many corporate bonds and they're in so much debt. It's actually disgusting. So I'd stay away from that company. But they are one of the big hyperscalers, so you got to keep that in mind. Oracle actually finished down, I believe, 7% on the day, or some number very similar to that. SoftBank was down a whole bunch in the Tokyo trading session. CoreWeave was down. Nvidia was down, I believe, 3%. Broadcom was down at 4% at one point. AMD was down a whole bunch. They finished down 3.5% on the day. Marvell finished about 3% down, but they were down a good bit. They went to 147. And the VanEck semiconductor ETF was down, I believe, over 3% today. And it wasn't just chips. The damage kind of spread, downstream of the AI stack that I was talking about in my last video. GE Vernova, which makes, turbines for AI data center power, they were down 5%. Vertiv, also down, and ARM Holdings was down a whole bunch today. And this is exactly what happens when a single piece of news threatens the entire demand thesis, guys. So you really got to keep that in mind. Sorry, I was just closing some tabs at the bottom there. But yeah, when something this pivotal like OpenAI really threatens the entire thesis we've known and loved about AI, it can cause some sheer jitters in the market. But in the first 15 minutes, we were seeing a lot of market resilience. I will show you this chart here in the first 15. We saw it dip down and we saw this huge volume up to the upside, but obviously sellers took over near the end of the day. But we did see recovery near the end, so it does keep me optimistic that people are kind of shrugging this off. And I personally believe that it kind of bled into some companies that it shouldn't have bled into, like for instance Marvell. Although they are intertwined with the hyperscalers, I do believe the hyperscalers are going to be they're kind of balancing themselves to be very unaffected by this in the future. And in my opinion, I'm going to be talking about this later, but there's just no way OpenAI ever goes bankrupt. These guys have so much on the line to lose if it goes bankrupt, especially these major hyperscalers, so they will never ever let that happen. But we saw companies like Marvell down a whole bunch today. I think it's a little unwarranted in my opinion. These guys are doing ASIC interconnections, working on custom silicon for all the hyperscalers. These guys are a great growth company, and I think it was just a little overdone. So I did call in my daily trade wire today for retests on 151 for Marvell today. And I do say in the next 3 to 6 months, they are extremely bullish. I have a price target for 180 to 120 for them, or 180 to 200 for them. But yeah, I said, look at the 180 retest here. We did break below in the pre-market and finish, almost shot right back to it. It was actually really interesting to watch. And then from there, they stayed above it. Let me go to a shorter time frame to show you guys what I mean here. Immediately, you see they shot below, and then immediately went right back up and kind of hovered around my 151 line that I've been telling you guys about for a while. Just keep that in mind. So, this is all here in the free newsletter if you guys are ever interested. But yeah, so there were also two other factors that kind of attributed to this sell-off. Crude oil briefly hit 100 per barrel, West Texas crude oil. After the UAE, they announced it's leaving the OPEC, which was kind of big. And the Fed kicked off a 2-day meeting with the 10-year yield near 4.3%, on sticky inflation. So those are also some other reasons why the market was down today. But the main one, obviously, was the reports about OpenAI coming out and what the CFO had mentioned. So honestly, guys, it was really just a perfect storm today. AI demand fears, plus oil shock, plus rate uncertainty, But like I mentioned, OpenAI was definitely a trigger. Now, I want to talk to you guys kind of about why OpenAI, matters so much for this entire trade, especially for Google, Microsoft, and all these other major tech-heavy companies. So, as we know, OpenAI has signed roughly $4 trillion in compute commitments over the next decade. I'm just going to break it down for you guys so you guys can get the gist of things. So, Microsoft is $250 billion in Azure capacity, which they actually did rewrite that deal. Oracle is $300 billion over 5 years. And I just want to jump back to Microsoft. They did rewrite the deal yesterday with OpenAI. Basically kind of de-risking themselves from that whole thing, because a major issue with Microsoft was that over 45% of their future revenue was going to be coming from OpenAI. So they obviously knew that there were risks involved in this, and investors did not like this. So they definitely de-risked themselves by getting out of that clause. OpenAI will still, pay them currently, but they don't get exclusive access to OpenAI stuff. So just announced today, OpenAI is moving some of their cloud services to Amazon actually instead of just Azure. So we're going to see OpenAI start to potentially get more revenue up by, getting into more hyperscalers, getting into other aspects. We saw them just get with Amazon today. Who knows what else they can get into. But yeah, I think that's another reason why Microsoft was up today. After that report dropped yesterday at about 11 a.m. during the trading day, we saw Microsoft shoot up from down $11 up to the green, and now they're up 1% on the day when all the other hyperscalers were kind of down, and a little lagging otherwise. Anyways, Broadcom had a $350 commitment for custom silicon, NVIDIA, $100 billion commitment in GPU capacity. AMD had a $90 billion commitment in chip purchases, and AWS was given a $38 billion over 7 years. So all these commitments, they depend on OpenAI, generating enough revenue to actually pay for the compute. But here's the math problem. OpenAI is currently generating roughly $13 billion a year in revenue, and they're projected to lose $14 billion in 2026 and burn cumulatively $115 billion through 2029. That is a lot of money. This company just takes money and burns it. Obviously, they're spending so much on R&D, but it really just shows you the math ain't mathin', right? The bull case has always been, yes, they're losing money now, but revenue is growing 60 to 100%, per year. So it does work out. Today's Wall Street Journal report, kind of cracked that assumption a little bit. If revenue is missing internal targets, the entire commitment structure could technically be in question. This is another reason why Oracle was the worst performer. They have the most concentrated exposure. Matter of fact, let me just pull up their chart really quick to see how they performed. I am not a fan of Oracle at all. You guys are going to hear that. Wow, they were down only 4%. I'm very surprised. One thing I will say, the reason why I think it's overdone, like I said, Oracle has $300 billion roughly tied in debt to OpenAI, right? So that's roughly 5x's Oracle's annual revenue. So that's a terrible, terrible amount. Looking at Oracle's chart here, we can see that Oracle was down only 4% on the day. You had companies that are really not that affected by it, down 3%. So, it really just makes you think a lot of buying opportunities did arise for specific companies. But with Oracle, I mentioned 5 times Oracle's annual revenue is the contract agreement with OpenAI. And, they took on significant debt to, build their Stargate data center capacity specifically for OpenAI, right? By issuing company bonds. Take a look at their balance sheets and their income statements. It is absolutely horrendous. It's not something pretty to look at. But if OpenAI can't pay, and kind of what this Wall Street Journal is kind of taking a little crack at there, Oracle is stuck holding, purpose-built infrastructure with no one to really take it. It was purposely built for OpenAI, and if they can't pay it, if they go under, then who can really use it, right? So another company, CoreWeave, which I wouldn't touch with a 10-foot pole, is in the same boat. Their entire business model is renting GPUs to a handful of AI labs, right? With OpenAI as a very top customer for them. SoftBank just put $30 billion into OpenAI and their latest funding round, and they have been extremely aggressive. They haven't been an extremely aggressive financial backer of OpenAI. CoreWeave, Oracle, and SoftBank all got punished, disproportionately because they are disproportionately exposed because of this, right? So really keep that in mind. Now I want to talk about something that's very interesting that I touched upon earlier. It's the Microsoft-OpenAI deal, right? So before we go any further, I just really need to address this because I did mention it earlier. Yesterday, Microsoft and OpenAI announced a major restructuring of their partnership, okay? That news was already in the market, when Wall Street Journal, when that report dropped. And it kind of shapes how investors, were kind of interpreting things when looking at Microsoft. The restructuring kind of removed Microsoft's exclusivity over OpenAI. And now OpenAI can serve products on any cloud like we saw today. They just made a deal with AWS. They can move to Oracle or Google if they want to as well. And Microsoft did keep its 27% stake and the $250 billion Azure commitment, but it gave up the moat of being the only place to access OpenAI models. So in isolation, looking at it from a vacuum, that deal was viewed as roughly neutral. A trade Microsoft gave up upside in exchange for clarity and the elimination of the AGI escape clause that was in that deal previously. But when you combine it with today's revenue misreport, it takes on a completely different meaning. The market is now asking, did Microsoft give up exclusivity because OpenAI's growth is starting to disappoint? That's something they could think of. Was Satya Nadella's team seeing weakening internals and decided to lock in the $250 billion commitment while they still could? Different questions the markets are asking. And I think markets really rewarded Microsoft because of this. And I think that's all speculation, but it's a kind of speculation, that drives multi-day repricings. Microsoft itself, it plunged about 5% intraday yesterday on the news. It's set up for, another very volatile session tomorrow, especially, when they report earnings, and the market, how it'll be hyper-focused on Azure growth, Copilot, OpenAI exposure and the adoption of their Copilot platforms as well. The Microsoft-OpenAI deal isn't the main story, but it is part of the backdrop that kind of made today's reaction more violent than it otherwise would have been for the overall markets, in my opinion. Speaking on that, like I said, they did finish a little higher, so you could try and find the bad in it all, but overall, investors do think this is a good thing because they're de-risking themselves from that OpenAI deal, right? So in my opinion, I think it's great, and heading into earnings, I'm extremely confident that they can get the job done and beat and raise, so I'm really happy with that. Also, Microsoft's price to earnings ratio, if you want to look at it from a ratio perspective and fundamentals of the company, I believe their price to earnings is only 26 right now, or maybe a little higher. But that's what some of the lowest it's been in 10 years. So really keep that in mind, guys. And all the analysts have price targets on Microsoft to be about 600, 550, right? And they're sitting at about 430 before earnings. So, the bar is so low for them going in. Any little sign of growth for their Azure, especially in Copilot adoption, will really just shoot this stock up, in my humble opinion. Another big part I want to talk about is if the bubble is actually popping. And I'm going to be giving you both the bear and the bull case. So we're going to start off with the bull case today and why it could actually be deemed as a buying opportunity. So firstly, OpenAI actually denied the Wall Street Journal report. And, like I mentioned, they said they're firing on all cylinders earlier. And they did say that the demand was strong. Sam Altman came out and said that. Also another reason is the $115 billion cumulative loss through 2029 that OpenAI was going to suffer. It was already public information. We knew they were burning money. Right. And the Wall Street Journal, they kind of mentioned that. And I guess maybe people took that as they saw it on paper, the number. But that was already public information. Everyone was already pricing that into the AI trade, right? And all the risks with it. OpenAI also has $50 billion plus in cash from recent funding rounds. So they're not running out of money as of tomorrow, right? They got a lot of money on hand. It's just the issue of how quickly they're using it. And I think the bigger problem that investors are scared of is if funding will ever stop. Because, there are some new alternatives coming in, like, more funding for Gemini, more funding for, Anthropic with their Claude model. Honestly, Claude is awesome. Like, I've just recently bought it, and no complaints on Claude there. It's extremely cool. You guys should really check it out for sure. Also, another thing too is the bailout incentive is extremely enormous. Microsoft, Nvidia, SoftBank, Oracle, and AMD have over $500 billion combined exposure to OpenAI. So no matter what, my theory is that they will try their best to rescue OpenAI before they let it fail, because if they let it fail, then the entire AI trade will go down. And that's under the assumption that it will go bankrupt. That's the only way this AI trade will fall. In my opinion, that's literally a less than 1% chance of happening. Another thing is that every prior tech wave, including the internet, the mobile bubble, the cloud bubble, .com bubble, they went through this exact phase where, doubt creeps in for a little bit of time before the next leg up. So I think there could be a next leg up. This is kind of reminding me of Q3 2025, when there was a lot of concerns surrounding the market, a lot of geopolitical concerns, overvaluations for companies, and then we had humongous, large cap tech stocks come in and just save the day with their earnings. And what's happening? We may potentially see that as of August 29th, 2026. Another thing I want to say for the bull case is it actually makes sense that OpenAI could have missed revenue, especially when competition is heating up in the AI program space, right? We have Anthropic with Claude, like I mentioned, Gemini, Microsoft Copilot. All these things could easily take revenue away and get sourcing away from OpenAI, funding. We're seeing more and more fundings and investment rounds into alternatives from OpenAI. And that's not that big of a worry, especially when other companies on the day are being taken down with it, like I mentioned Marvel. And I'll explain that. Like, these companies may not be investing as much in OpenAI. And sure, the Wall Street Journal can blow it out of proportion and say this is terrible. This is, whatever the worst case scenario is. But funding is just being circulated into other companies, and it's moving. And the main companies that were brought down with it, like the hyperscalers, for instance, these guys all have great moats and great businesses. The fundamentals of their company haven't changed one bit, right? I guess the people are just worried about the exposure, but if you invest in Microsoft, especially after they de-risk, that's a great company. Google as well is a great, not too much exposure to them. Even Marvell as well. I think a lot of these high cap companies are, they're poising themselves and position themselves in to be great winners in this AI trade, right? But now I want to talk about the bear case as well, and why this could, in brackets, could be something bigger. and could be the start of something bigger that we should worry about. Earnings growth for the Magnificent Seven is projected at 18% in 2026, which is actually the slowest in 4 years. That also take that with a grain of salt because earnings have been growing exponentially and they are at so high valuations, it's hard to continue growing them. The amount of money they're making is going to be the highest ever, but the growth rate could be smaller. So, keep that in mind. Also, the second point is that combined depreciation costs from data center build-out is rising from $22 billion per quarter to $30 billion next year, eating into free cash flows for businesses. Microsoft and Meta are expected to have negative free cash flow after shareholder returns in 2026. That one's very interesting. Oracle's credit default swaps just hit their highest level since 2009. Once again, Oracle being a poo-poo company. Their bond market is more worried than the equity market. Like I said, they have bad debt on their balance sheets. Take a look, guys. Oracle's not a good company you want to touch with a 10-foot pole. OpenAI's market share is generative web traffic. It dropped actually from over 80% to 64.5%. As I mentioned, Gemini and Claude and other alternatives, they take more share. Another issue is that circular financing is growing and it's everywhere now. So we have NVIDIA invests in OpenAI. OpenAI buys NVIDIA chips. AMD gives OpenAI equity warrants in exchange for chip purchases. And, the same dollars are being continued multiple times around the ecosystem. So, look at both cases, and the truth is going to be somewhere in the middle between both the bull and the bear cases, okay? This isn't the bubble fully popping, but it is kind of the first real test of whether the AI CapEx math works. And we're going to really put it to the test to see if these companies, the major hyperscalers reporting earnings tomorrow, are going to be able to see if they're getting return on investment for their hyperscaler build-out. So that's a big day, April 29th, 2026. So please, guys, if you have leaps going into tomorrow, please ensure you guys are de-risking yourselves, dollar cost averaging and everything, because tomorrow could be an extremely volatile day. Although I'm an extreme bull, I'm not delusional. I know how to properly de-risk. So please make sure you're mitigating as much risk as possible while maximizing your upward momentum, right? So it's whatever risk you're willing to take, right? So now I want to talk about what this actually means for, the AI stack and specific companies as well. So firstly, with Oracle, they are the most exposed. They're the most punished because of it. They have $300 billion committed, and that is a extremely large amount. Like I said, 5 times their annual earnings, right? So if OpenAI even renegotiates terms, Oracle can take a massive hit. Their credit market is already pricing in a real risk. So the verdict is highest single name risk in the AI stack. That's my verdict for Oracle. Next one is going to be CoreWeave, which is another company I just would not even touch with a 10-foot pole. As you can see, it's down just 6% today. Wow, that's crazy. But CoreWeave is a pure play for AI infrastructure with extremely heavy debt. Once again, if OpenAI, if the demand ever softens, the equity could literally go to zero. Like, this is the most binary name in the trade, in my humble opinion. So the verdict for this one is going to be, it's the highest leverage to OpenAI specifically. SoftBank, which is another interesting one that has a lot of exposure to this OpenAI news. I'm not even sure if this is the correct one, but let's just double check. We'll go to another one. We'll look at the SPY for this one, whatever. SoftBank, their financial exposure is through investments, not operations with OpenAI. So they put about $30 billion into OpenAI, which is a markdown round early, a fail IPO would force significant write-downs for that business. So the verdict is they have high financial investment risk, not operational risk with OpenAI. AMD, however, is exposed. Let's take a look at AMD's chart. Actually, I haven't looked at that chart for today, but AMD is exposed through the unique equity warrant deal where OpenAI can actually earn up to 10% of AMD's entire company in exchange for $90 billion in chip purchases, and also when it hits $600 a share for AMD. So AMD's entire AI growth thesis depends on this single relationship as well. If OpenAI ever scales back, AMD's valuation premiums kind of evaporate, essentially. So the verdict is kind of the highest risk, highest reward in the entire AI stack for AMD. So that's why you saw it kind of go down about 3.4%. But like I mentioned, the odds that OpenAI ever goes under is extremely low, and the odds that the demand for the product goes down is going to be or it goes down significantly to the point where AMD is really going to feel it is going to be pretty low, in my opinion. Next one is going to be NVIDIA. NVIDIA is an extremely interesting company. They're the king of the AI trade currently. My prediction is not for long, but NVIDIA has the most diversified customer base. They have xAI, Anthropic, Sovereign AI, every single hyperscaler. Even in a bad OpenAI scenario, NVIDIA has many other buyers to choose from, right? So they also have, the strongest software moat as well in the entire world. So, Verdict is, they also have the strongest, hardware mode. I'm sorry if I said software, but they have the strongest hardware mode in the entire world with, their extremely powerful compute GPUs and CPUs as well that everyone just can't seem to get enough of. So the verdict for this company is going to be, it's the cleanest AI infrastructure exposure with, a very, very good downside protection. So kudos to you, Jensen, for making a really good deal with OpenAI. The next one is going to be Microsoft. So Microsoft is the most diversified hyperscaler in this whole one. They got Office, Windows, Azure, gaming sectors. They got LinkedIn generating over $200 billion a year with zero OpenAI dependency. The 45% RPO concentration that they have with OpenAI, that number I threw around earlier, is real, but the underlying business has massive non-AI franchises, right? So the verdict for Microsoft actually is that it is the most offensive in terms of AI exposure to this OpenAI deal. Plus, they just extremely de-risked themselves, so they are by far the most offensive when it comes to this. The next ones I want to talk about are interconnected ASIC companies, or in other words, Broadcom and Marvell. So as we know, they're also dabbling in the custom silicon designing world. They're actually very good beneficiaries of the trend away from NVIDIA because, hyperscalers who want to, reduce dependency need someone to help design custom chips. Broadcom does own, sadly, 70% of the market share. Marvell owns about 15 to 20%, and both have, multi-customer exposure across all Google, Meta, Amazon, and Microsoft. So all the big four hyperscalers. The verdict for these two companies, they are exposed to AI capex, slowing, but they are structurally winning in the shift away from NVIDIA. Meta and Google, I want to talk about, were the other two hyperscalers here. So let me just pull up. We'll look at Meta's ticker. We've been looking at Google's a lot, so we'll look at Meta's ticker. Meta and Google, they fund their AI through massive ad businesses, right? They can absorb AI losses essentially indefinitely because of cash generating cores they have of their business. They report tomorrow, CapEx guidance will be the most watched data point of their quarter, right? So the verdict is they're also very defensible comparable to Microsoft. And they have good AI bets due to non-AI revenue base, right? So they have an ad revenue base at their core. Now I want to talk about some downstream names that don't get a lot of love, but we got, Vernova, Vertiv, Caterpillar, like the power and cooling infrastructure plays, water cooling and all that you need for data centers. These got hit today big time because they're third derivative exposure, right? So if what I mean by that, is like hyperscaler capex, if it ever slows, data center build out slows, and everything downstream will kind of slow down. It's like a little bit of a trickle effect down to the rest of the AI stack that I was mentioning, right? So the verdict for this one, they have the highest, risk, the highest beta to capex in terms of that ratio that you're looking at there. Now I want to kind of run you guys through quickly what to actually watch this week. We got some big names reporting, especially on the 29th. So that's going to be the big day for earnings. We got Alphabet, Amazon, Meta, Microsoft, all reporting kind of similar days to each other. We got Apple follows on the Thursday. I believe Amazon is May 1st. It's roughly a third of the entire NASDAQ's, market cap. It can literally be repriced in 48 hours, right? So here's a framework I want you guys to follow. So it's going to be three things, that will determine whether today's sell-off was a one-day wobble or kind of the start of an actual real correction, right? So firstly, the first part here is going to be looking at the CapEx guidance. We got, watch every hyperscaler's 26 and 27 CapEx numbers. If any of them guide meaningfully lower, that's the actual bear signal, right? So if they reaffirm or raise, then, the infrastructure side of the AI will rally hard. But if they actually, meaningfully lower their estimates, that could be a little bit of an oopsie-whoopsie for the AI trade. The second one is going to be, any OpenAI commentary by these main hyperscalers, primarily Microsoft. Microsoft especially will face, pointed questions about, Azure's exposure to OpenAI, the new revenue share cap that they have and Copilot adoption. So, any vague answers will be punished because of this. I've seen it many times. If the CEO or whoever's talking gives any vague answers, it leads to uncertainty, causing the markets to sell off out of fear. And any specific numbers showing, diversification, but not beyond OpenAI will be rewarded. And any number that beats projections for Azure, especially like I mentioned, the bar is so low for Microsoft, guys. Any projections that they might do better next quarter or the year to come, it's gonna really raise the price. And the third one I want to talk about is forward demand signals. All right, this is extremely important. Please watch for any commentary from the hyperscalers about AI revenue, enterprise adoption rates, and unit economics. What that means is that the market is finally asking whether this is, paying for itself. If they can actually prove that the return on investment is going to be there and it can materialize from the amount of build out they're spending on this CapEx, right, for their AI adoption. There is a fourth factor. It's not really that important. That's kind of external to earnings, but it's any further reporting from, the Wall Street Journal or any other outlets, kind of like Axios, or the Bloomberg Terminal, stuff like that, on OpenAI's actual financials. If more leaks come out confirming the revenue weakness, then selling, I wouldn't be surprised if it continues regardless of what hyperscalers say. All right, guys, today wasn't the end of the AI trade, but it was a little bit of a shock, and you saw a lot of individuals get scared and kind of sell quickly, but we did see some buying back, and I do believe tomorrow will be leaning green near the end of the close. But I do want to mention that for the first time in this entire AI super cycle, the market got a very concrete reason to question whether the demand actually materializes at the scale that's being priced in, right? So the reaction kind of tells you sentiment was more fragile than the record highs actually suggest, right? A simple Wall Street Journal article sent the markets down, or the S&P 500 down 56 points, right? So just really think about that. When, stocks are priced for perfection, even a single article can really trigger a 3% semiconductor sell-off easily, right? So the framework I encourage you guys to take away from today, is that AI is going through the same, maturing cycle, every major tech wave goes through. The question is kind of shifting from can we build it to, can it pay for itself? Is there going to be able to get a return on investment for the capacity we are implementing and building out? The companies most insulated have diversified revenue, real cash generation outside AI, and actual pricing power above the commodity layer, right? So above the AI stack. The companies most at risk have concentrated AI exposure, leveraged balance sheets, and revenue models entirely dependent on a small number of customers. If you're not picking up what I'm putting down, ladies and gentlemen, I am referring to ding, 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 SoftBank. I'm referring to ding, 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 Oracle, CoreWeave, all those companies. Actually, not really SoftBank. I did say they just have financial investment exposure, $30 billion worth, but Oracle and CoreWeave, man, really do not touch those companies. I honestly don't even know what CoreWeave does, to be quite frank. I don't think anyone really knows what they do. I'd stay away from them. And like I mentioned, honestly, guys, please go take a look at Oracle's balance sheets. They're absolute doo-doo. Please do. You'll probably laugh, because I know I did when I saw them. But anyways, guys, if this analysis was helpful in any way, shape, or form, make sure you guys subscribe to my channel. I'm posting videos daily except weekends. I think I'm going to, kind of just chill on the weekends, hang out with family, hang out with friends, After all, I'm pretty young and dumb, so I'm trying to, have some fun on the weekends. But anyways, if this was, helpful in any way, guys, hit the like button, subscribe for more deep dives, more videos, and leave a comment, another company you want me to talk about, or like another topic you guys want to hear, anything, like really. And make sure you guys subscribe to my free TradeWire. It's the link's gonna be at the top of the description for this video, so please click on it. It's absolutely free. You just put your email in, and every morning at 9 a.m. you will get an email free in your inbox, and it's just gonna look something a little bit like this with main points to watch for, charts, analysis, and all that stuff. Yeah, guys, I hope this was helpful. Thank you for watching. Give me a chance. I will see you guys in the next one. Make sure you guys all stay safe, stay in the green, and God bless. Take care, guys.